Okay, so welcome back. This is part 2 where we look at the week ahead. And when we look at this week, there's a reasonable amount of data coming out. Just remember it's the beginning of August on Tuesday. So in the US we've got Chicago PMI, we've got Dallas Fed manufacturing. Of course, you know, manufacturing is such a challenge at the moment in most countries. ISM, which again is all around manufacturing, so just keep an eye on those. JOLTS are coming out. You know, we've got lots of the usual employment data coming out this week in the US. So we've got JOLTS, then we've got ADP, initial jobless claims, which is something that I focus on. You know, are more people losing their jobs, which is going to give you insight into how the economy is doing. Then, of course, we've got NFP. And again, you know, just to emphasize, I look at the average hours worked, the average earnings, much more than just what the NFP number is itself. And then, of course, what the employment rate's going to be, and that stands at 3.6% at the moment. Then moving on to the EU, a bit of data from them as well. We've got CPI coming out, GDP, PMI, then some unemployment data, then PPI, retail sales. So this is going to be a good week to find out and discover how the European economy is doing, but also how their inflation is working after, you know, especially after the ECB did another rate increase last week. Just remember, all these rate increases, they do take time to feed into the economy. It's not instant. It can take months and months for them to really have that economic impact. Okay, moving on to Germany, we've got retail sales, PMI and unemployment. In the UK, we've got some housing data coming out, so it's been quite weak in the UK so far. Consumer credit, so again, that's one to say, sort of keep an eye on. How many people are having to use their credit cards now because they haven't got enough disposable income from their wages. Then PMI, and this week we have MPC, so the Bank of England rate decision. So again, it's more likely to be an increase. Whether they will go in the same direction as the FOMC and ECB and not give any forward guidance and say it's going to be much more data driven, we'll have to wait and see. But, you know, I would expect that. You know, the central banks aren't scared of causing a recession. They're more scared of inflation. So, you know, that's something to bear in mind. And anyone that expects rates to be cut this year, I think are just dreaming, you know, given sort of obviously the main key areas I look at, which are America and Europe. Okay, so Switzerland have CPI coming out. China PMIs, so manufacturing really, so PMI and the Caixin PMI as well. Then in Canada, we've got PMI and employment data. In New Zealand, we've also got employment data. In Australia, we've got housing data. Now, there we've got sort of also the central bank meeting, the RBA. That there could be another 25 basis point hike, but they could pause, especially, you know, now a lot of the other central banks are pretty much indicating that they're almost at their peak if they're not already. In Japan, we've got industrial production, retail sales, and some housing data coming out. So it's going to be a fairly active week data-wise. And I'd also, you know, just like to point out that we're now sort of in school breaks. So a lot of traders will take time off, especially with, you know, August next week. So that can lead to lower volumes, but an increase in volatility. it's much easier to move the market, or you know, when the markets are thin. It's the same as December, Christmas time. So just bear that in mind. You know, sometimes you've got to adjust your size of your trades, make them smaller, so you can have wider stop losses, but without increasing the potential loss. Okay, so I'm not going to bore you and go through it all again. Hopefully you've watched part 1 and you're going to watch part 4. So it's just a reminder of what we provide. You know, everything we do is here to help you either become a trader or become a better trader. So just reach out to us, find out what we can do for you.